Hello friends, welcome to a new edition of our weekly webinar. It is 5th of October today, Friday 2018, and we had another weekly closing today. As we know that market is a real state of bloodbath, okay, and for the past few weeks we have been telling this, and but we did not expect this much of capitulation, right? Yeah, trend is down. There is a huge volatility, and prices declined on a weekly basis. This week, market closed. Let me see. Yeah, last closing is at just over 10,300. 316 to be precise, and on a weekly basis we lost nearly 600 points. That is nearly 6% loss on a weekly basis, which is huge, which is I do not remember any such incidents in past 5 years, and this is what excessive volatility can do. Now, the fact is prices have closed below the important moving averages, as if it did not occur, and it did not give any respect to the 200-day moving averages. That was quite unnatural. And a second thought, why should it not be like that? Because lots of fundamentally bad news are in the offering. Yesterday, central government declined the petrol and diesel prices, and this is being seen as taking a knock on the revenue, right? And it also compelled the oil marketing companies to reduce its price by 1 rupee per liter. Now, and that is the reason we saw across the market capitulation in oil marketing companies in Hind Petro, BPCL, IOC, ONGC, GAIL. All these stocks declined huge from 10% to 22%. Now, one may wonder why 1 rupee change in petrol or diesel prices should bring in this much of capitulation, this much of sell-off. Now, this is not a question of whether prices are being reduced by 1 rupee or whatever. It is a question of a change of stance on part of the government. This government was actually promoting reform. It was talking about agendas on reform, and this is for the first time the government shifted its agenda from reform to being populist on the wake of parliamentary elections pending next year. So that is hurting the sentiment. That is what is being viewed as negative, and that is the most important reason why market saw such a huge sell-off, especially in the OMCs today. Now, there are other factors as well. There is a huge depreciation in rupee, and rupee has been one of the weakest performing currencies in Asia. Uh, Now there are many theories why rupee is weak. Rupee is weak because crude oil is rising, and we have to import a lot of crude oil. And crude oil is rising, at least in our domestic front, because rupee is weakening. So this is a vicious cycle, and we do not know what is the cause and what is the effect. But the cycle is going on like this. Fact is that rupee has closed uh, at nearly a doorstep of 74, which is another lifetime low for rupee. And this trend is likely to continue going forward. Not only that, the bond yield is also rising. Uh, the 10-year bond right now is approximately at 8.18, which is on a roll. So in every front, we are getting bad news, and the market is just trying to discount all these news. I was telling for the past 3 weeks that we are actually on the verge of a bear market, and the bear market has started with a huge volatility going forward. Even lower prices can be expected, and I'm not expecting 10,000 to be held, and that means we are going to see Nifty in 4 digits, and that will be quite an experience because past several months uh, we were not used to see Nifty in 4 digits. It was all in 5 digits. And now I think 4 digits are coming in Nifty. That means 10,000 is not going to hold anytime soon. So that's the view. Mm, we cannot recommend stocks to be traded from the long side in near future. Although there are some pockets of outperformance as well, and these outperformances are basically in IT sector, TCS and Infosys mainly, the large cap IT stocks. Those are actually the beneficiary of a weak rupee. Their main revenue comes in dollar terms, so a strong dollar will boost their revenue in rupee terms. So these stocks are likely to outperform, and chart suggests that their uptrend is still valid. So these stocks are the only loan player or only the loan sector that we can find right now. Maybe some other stocks could find out on a weekend research, but we have not done this as yet. Market just closed a little while ago. And apart from that, some FMCG stocks are still holding the ground. We are not sure whether these will continue to do so. But the likes of Dabur is looking resilient. It has not given up as yet. Prices today closed at around 420 per share. And although it is below its 50-day moving average, but 200 days still holding. Hindustan Unilever, although took a beating, but the chart suggests that we are not as weak as the other stocks in other sectors. And in private banking sector, only one stock that catches our attention is HDFC Bank. For whatever reason, there are some reasons, but HDFC Bank is not as weak. So these sporadic uh, pockets of outperformance we can find out as of now. TCS, Infosys, Dabur, Hindustan Unilever, HDFC Bank, and all these things. Apart from these, there is just bloodbath across the street, and everywhere You can say pharma sector to be resilient a bit. The likes of Aurobindo Pharma, Ajanta Pharma, or Sun Pharma also qualify because their earnings are also driven by strong dollar. But as you saw, we closed below 200-day moving average for 2 consecutive days, Nifty, and that's the official bear market. And prior to breaking of this 200-day moving average, Nifty went as high as some 1100 points higher on the upside. That is when 200-day moving average was at 10,700. Nifty was at 11,700. So 1,000 point of rise from 200-day moving average. That means even if 500 and 600 point fall below the 200-day moving average is quite of the order, and that means we are very likely to go below 10,000 levels in Nifty. I don't know whether it will happen next week, but the way market is showing its weakness, I cannot rule out that possibility either. So everything is possible. If you trade, you have to trade with stop loss, both on the long side and on the short side, because after all, we are really at an oversold region. But when a new trend emerges, the stories like being overbought in an uptrend and oversold in a downtrend doesn't make any sense. Just there is trampling all across. People show hardship mentality, and to a certain point they will hold on to their position, but when the evidence will gather to an extent that there will be no point in denying the fact that we are actually in a bear market, then people will actually scurry to exit, and that will create a lot of havoc and a lot of panic that I'm expecting going forward. I'm not sure whether this will happen next week or not, but yeah, that is how some short-term bottoms are being made. So that's all for this week, guys. I hope you will trade with proper caution. You will have to use stop losses, and nevertheless, some good times will be coming, and some weak longs will be washed out, and some investment category stocks will come to their proper values. And when such things will come to place, we will definitely be the first one to inform you. So that's all for this week. Goodbye, and see you next week. Bye.